Okay, we got the recorder going. Welcome everybody to Tuesday, April 12th mentorship webinar. And as we've been doing, I want to start out talking about the market and what I see going on in the market and where we might be headed. Remember, we always look at William O'Neill's idea of a market turning around, and that is that if you get a down day, which you can see here is, I take these as the red bearish days on the candlesticks. If you have a down day, now maybe he was talking about actually down days, and that would not be one, but in any event, that's what I look at, and then I go over to look at the volume on those days. And if the volume on those days has increased, and you get 4 of those, if you get 4 down days with increased volume in a 2-week period, you're getting to the point where things might be turning around. Well, we're there. We're there. And I go back to this one right here. Let me blow that up a little bit. This one right here would have been on, no, actually, I went all the way back to here. That was a down day, and that had an increased volume. This was a down day and had increased volume. This was a down day and had increased volume. This was not. This was. And then just yesterday, that was too. So that is 5 days within the last 2 weeks where we've had down days with increased volume. So in my mind, things are slowing down. Things are slowing down. Does that mean it's gonna turn around here on a dime? No, because one of the things about when the market turns around, it kind of rounds. It kind of rounds down. Whereas when you're down and the market takes off, it explodes to the upside. And it usually does that because of short selling. That's short selling, okay? And I got a little bit of a cold, so bear with me today. I'll try to mute when I feel something coming on here. I think we're probably going to, if we take a look at the SPY here for a second, you can see we're on the Dow, we were up around some of the Fibonacci numbers. But if we look at the SPY for a second, you can see this rounding going on up here. However, the 5 and the 8 have not crossed over the 13 yet. So we're seeing what we're seeing a lot in some of the stocks that we have, and that is kind of, I would almost classify this as channeling. So let me put on some channel lines here. Let's say this would be the top of the channel. And let's say this would be the bottom of the channel. Okay. And you can see how it's been in there for the last 2 weeks. Even though it's given the William O'Neill countdown that we might be heading down, I think it's going to stay in this channel for a while. How long? I have no idea. I've got a little bit of a bearish bias. However, until we break through the ribbon, I mean, we follow this 5, 8, and 13-day exponential moving average line, and on the stocks and everything, and until it rolls down and this breaks through, it's hard to say what we're going to be doing. Now, every night I do the market insight, and I've been neutral for the last 2 weeks, because yes, indeed, I think we do have a downward bias. But look where that is. Look where that resistance is. Okay, and then there's a little bit higher, and then there's a little bit higher. Okay, is it possible that if we break up here, and it's quite possible we will do that, but that's a lot of resistance up here and up here. That's a lot of resistance. At some point in time, this puppy is going to drop. Now, is it going to drop catastrophically? I have no idea. But that's just the way I see the market right now. And if you look at our directionals, we have 5 puts, but we also just recently have put a couple calls into the portfolio, because if it's going to sit there and do this and possibly break to the upside, I want to have some calls in my portfolio. So that's what I see on the market itself. Okay, so let's go ahead and take with all this channeling going on here. What do you think that gives us? Does that give us any opportunities on the SPX? Oh my, yes. Oh my, yes. Tremendous opportunities to pick up some really nice profit in a very short period of time. You can see that the market has, as far as the short term is concerned, it's started to slope down a little bit, and that kind of goes along with what I'm saying. And we are in the overvalued area. And we did quite well on this one. We talked about that last week. Okay, and here was one on April 1 that we talked about, and it came down here to the 261. And when you have a move, when you have a measured move, and it comes to the 261, and it comes to the -1, what do you think you ought to do? What do you think you ought to do? Take profits. Absolutely. That's just so easy to look at that and say, I'm going to take some profits. Now, is it possible that it'll go a little lower? Absolutely. Absolutely. But my goodness, that was about a 50% move right there in the SPX in 2 days. Then it came down here to the -1 with the 261. Well, what do you think's going to happen? Yeah, it's probably going to rebound back up. And it did. And it came up to the +1. Well, when it comes up to the +1 and it's in the overvalued area, hold on for a second. We want to get, excuse me, another bear call. And this would have been on April 6th. April 6th was last Wednesday. And it came up here towards the end of the day. And that's a wonderful time to just go ahead and sell the 2060 call and buy the 2065 call. And I looked at the 4th week in April, and it was $3. Okay, right off the bat, the max I can lose is 2. Okay, so remember with this strategy, we're looking for about $2.50, so that you've got about a 50-50 game. And then we're saying, well, okay, with this knowledge and the regression channel and so forth, we can do better than 50-50. Well, here's one that was $3 with only $2 salute. So right off the bat, it's a 66% in our favor. And then you put on top of that the regression channel. Bam! This is a no-brainer. This is a no-brainer. When it came up here, that's a no-brainer. You go ahead and grab that. Because what happens if the next day it does this? Well, you can probably go back here and do a Fibonacci and say, it might come up to here, but I'm okay with that because I had that the fourth week in April, which was 18 days away. And I like what we're doing there as far as giving us more time. We're still very profitable because that April 4th, selling the 2060 and buying the 2065 we did that for $3. And you exited right down here. And that was right down, let's see, that came down to the -2. I didn't even bother putting a fib on there. It came down to the -2. Well, what are you going to do if it comes down to the -2? Take your profit, 50%. This was a 50% move. This was a 50% move. Then it came back up. Didn't really make a measured move at all. Didn't really come up to the top here. Pulled back. Came up the next day. Sell the 2060. Buy the 2065. April 4. We got that for $2.70. And I exited right down here at the 126.2 and the -1 and took that profit, and it was 35% profit. And then what happened to the market? It took off. It took off. Okay? And that's how you do the SPXs. The SPX, trading the SPX the way we've been doing it and the way I've been talking to you about it for now, a little bit more than almost coming on 2 years. We've been talking about this for 2 years. My marketing team, we're about ready to release this technology. I call it technology, it's strategy. You guys have been privy to it for 2 years. You know how powerful it is. And we're about ready to release this for well, a lot more than what you guys are paying, let me put it that way. Because it's just a strategy that works. It just works and works and works. And it's like, why would you not do this? Why would you not do this? Because just like when we trade the weeklies, if this thing goes against you, if you put on this position right here, where's it going to go? Is it going to go all the way up here? Maybe, but we got it 20 days, and if it's way up here, you might want to get another bear call. Or if it does a measured move, if you're down here and it does a measured move to the upside, you just can get out. You just can get out because we've got a kind of a getting out with controlling our risk and getting out on the profit side using the Fibonacci's. And this, the SPX coupled with what we do on the weeklies is just a powerful tool. Powerful strategy. Do you have to watch this all the time? No, you do not. This even less than trading the weeklies because you've got some reprieve here. Once you put this on, remember, I watched the market when it first opened from 9:30 to about 11. I usually, I do my strategizing, if you will, and I do my meditation and I do my calming. I calm myself. It's first thing in the morning, and I look at the market fresh, and I'm calm, and my heart rate's down, and that's when I put together my strategy. Okay, that strategy does not change during the day. I do not ever change my strategy during the day. I might execute something that I saw, execute a trade or execute an exit during the day. That's fine, but I will not change the strategy. Okay. Then usually I like to look at the market around, midday, noon, 12 to 1. And I like to watch the close. And you don't have to do any more than that. You really don't have to do any more than that. Let's look at this. First of all, the institutional traders do most of their trading at the end of the day. You see the volume increase from 3 till 4. They're looking at what happened during the day, and does it make sense for me to add to my positions, subtract from my positions? And you can see that going on here on the SPX. Look what happened at the end of the day. Okay. Look what happened at the end of the day. Look what happened at the end of the day. Look what happened at the very beginning of the day. The very beginning of the day. Okay? Really, if you don't want to even look at it at noontime, and you can watch the market in the beginning of the day and you can watch it at the end of the day, you probably got this strategy locked. Okay? All right. Questions on this. I know we've got some new people. I see some new people on the webinar today. Welcome to you. A couple ways you can ask questions. Either raise your hand and you and I will talk one-on-one, or you can type it in the question box and I'm not going to wait till the end of the webinar. As soon as I see a question come up there in the question box, I stop what I'm doing and I try to answer that. So there's two ways you can do that. So anybody have any questions at this point in time on what's going on with the SPX trades? Okay, Ed, good question. Ed says, would you put on an alert if you had a bear call just above the -1? If you didn't have time to watch it during the day? That's a perfect strategy, Ed, and I'm glad you brought that up. That's not only a great strategy for getting into a trade, but also for taking profit. Or you might want to say, hey, if it gets around this region, I want to exit it as far as taking the loss is concerned. When Thinkorswim put on this alert thing, that really made it a lot easier, so that you didn't have to watch the market all the time. Absolutely. Okay. And if you say, right now, if the market gets up around here, send me an alert. Absolutely. Or if you put on this trade, when the market gets down around here, send me an alert. Or you've done the 127 and you say, okay, it's down to the 127 fib, send me an alert. Absolutely. That's the way to do it. And you don't have to watch it all day. That's a good point, Ed. Thanks for bringing that up. Great point. Steve, I see your hand is up. Let me unmute you. Steve, welcome back after your 1 week hiatus.
Yes, it was. It was quite lonely for that week. On April the 7th, I put on a 2025-2030 bull put.
Hold on. April 7th, which was this guy right there.
Let's see.
You put on a 20, what was it again?
2025. I sold the 2025 and bought the 2030. Is that right? Or do I have it backwards?
No, just the opposite. You would have sold the 2030 and bought the 2025.
Yeah.
Mm-hmm.
Okay. All right.
That's
now,
perfect.
And today, I'm hard pressed to find a measured move in today's trading.
There hasn't been one.
Okay, that's why I can't find it. All right.
No.
All right. So what would be if you were in this situation?
That's gone straight up here, Steve. But look what's happening now. We might get one here. Well, that's a pretty big measured move. That's going to take it up around here.
Okay. All right. You just answered my question.
I did?
Yeah. Yeah. Okay.
Okay. Cool.
All right. Well, the question was, since you don't have a measured move to gauge what to do, then you wait until you do, or wait until it gets to the plus or minus one.
Well, I look at both. Oh, by the way, did you get out of this yet?
No.
Oh, you're still holding on to it.
Yeah.
Okay. Well, that gave there's one chance to get out. There's two chances to get out. Don't let this one go by, Steve.
No, I don't plan to.
But if this guy does make a measured move here, you can put on a 127 or whatever, and if it takes it above here, this could be a big one. Mm-hmm. It could be a big one, because we've seen it's right in the middle of the channel we kind of put on, and it might push up to new highs. So, but don't let it go by. At some point in time, you want to go ahead and take your profit. I'm sure you've got 50% profit in there by now.
Yeah, pretty much. Well, see what I was looking at. If you look at Friday, it came up pretty good, and I said, well, it might make a measured move and go even higher. Well,
gotcha.
I turned around. It was and it's exactly the same thing happened Monday. Well, it might make a measured move, and it didn't.
Mm-hmm.
So I think today, if it gets to the plus one, I'm out.
Okay, cool.
So
cool, but I feel it might have a ways to go. So, of course, that's just my feeling.
Well, we can watch it, can't we?
We can watch it. We can watch it. Absolutely. And not only that, you could maybe say, well, it made a measured move here, and it's going up above here. Well, if it goes below here, let me have an alert call my attention to it. Yeah, there's all kinds of things, but taking your profit at the plus one that's an awesome thing to do.
So, all right, thanks a lot, Dale.
You're welcome, Steve. Hey, question. Last week we kind of had some problems. My Thinkorswim kind of froze up, and I ended up doing the webinar in two parts. Did you get the recording in the two parts, and did you hear that okay?
No. Well, the answer to your first question, yes, I got both recordings. In answer to the second question, they both fizzled out after a couple minutes.
Okay. Mine didn't. I didn't see that. So, did anybody else see that fizzling? Just maybe put a Y in the question box. Yeah. Did anybody hear the? Okay, Eddie said I got them all. Okay. No, Fred said no fizzling. So I don't know, Steve. I don't know.
Okay. All right. Well, I'll go back and relook at them then.
Try it. Yeah. Try it. All right, Steve.
Thanks.
Good deal. Okay, let's see, Bonnie. So it looks like another measured move down on TLT. Yeah, I'm going to get to TLT in just a second here. Absolutely. Any other questions on the SPX? Any other questions on the SPX? Okay, Bonnie, let's go ahead and look at the ETFs and the weeklies, and we'll take a look at TLT here. Okay, and Bonnie said, so it looks like another major move down on TLT. Yes, indeed it is. And there was the first measured move here. Okay, and there's the 127, and there's the -2, and that's my target. And it looks like it might be heading down to that point. Now, would I get in there at this point in time? No way, because what I'm looking for now is that measured move to the upside. Okay. Yeah, when it's heading down with that big red bar, let it go. Let it go. But if it gets down around here, I'd take it. Absolutely. Good one, Bonnie. Okay, let's take a look at our weekly on the SPY. Now, on the SPY, we didn't see a measured move on the SPX. It looked like a pretty straight up, but here's what I had this morning on the SPY. It happened overnight. Okay, it came back down and then pushed up, and there was a measured move. And lo and behold, it came to the 127. Well, we see these things time and time again. The probability it's going to go to the 127 is very high. It's less of a probability for it to go to the 161 and even less to go to the 261. But those are the three that I follow religiously. And usually at the 127 and 161, unless it blasts through them, it will pull back and consolidate a little bit. Is it going to turn around? Who knows? Who knows? But this is a little bit of consolidation going on here. Steve, this might blend into your SPX, but because a lot of things we do here have synergy with one another, okay? The 161 would be at the +1. And the 261 would be a little bit above the +2. So this would be a great point to take profits. It's a great one to take profits. Okay? John, I see your hand is up. Let me unmute you here for a sec. John, how you doing today?
I'm doing fine.
Good.
Thank
good.
you. Mm-hmm. I have a 206 put on SPY.
Okay.
Am I in danger?
You have a 206 put.
Mm-hmm. And it expires on Friday.
Boy, John. I don't know what's going to happen between now and Friday, but I sure would not want to have a 206 put.
Uh-huh.
I sure would not want to have that.
What, on the basis of past experience, what do you think are the odds of it getting up to the 161? Especially in this kind of market, which you've been telling us, it looks like it's coming down.
Well, let's take a closer look up here, and let me put that channel back up.
Mm-hmm. I see.
The thing is, John, is it might head on up here just like it has before, and then bounce and then come back down. And kind of right now, it's kind of right in the middle of that channel, isn't it?
Yes, it is.
So it's kind of hard to say. I got the 206, which is right here. Boy, oh boy. Yeah, it might do this. And then maybe next week after it expires, it's going to come down here.
Yeah, that's exactly what's going to happen.
Yeah.
That is precisely what will happen.
Well, we'll see. It could. Yeah.
So I guess I ought to get out of it.
I think that would make sense, John. I really do.
Yeah.
Yeah.
All right.
Okay. All righty.
Thank you.
You're welcome. You're welcome. I hope I'm wrong there. I hope I'm wrong, but better to be safe than sorry on that one. Let me save this channel while I got it up here. Okay, good deal. Alrighty, let's take a peek at our theta trades. And the first one we got is Amazon. And Amazon, I think we're in pretty good shape with Amazon because we've got it all the way up here at the +2. That's going to be some hard resistance right there. And if it gets to the +2, it's going to find, you see where that is, it's going to find some support or some resistance here. And Amazon is channeling just like the market is channeling. So I'm okay with Amazon being up just a little bit today. Take a look at the risk profile on that guy. And you can see that, yeah, we're down about 1%. We're down about 1%. So I'm all right holding on to that. Now, excuse me, Fred, you had a question on, how do I do that 6%? Remember, the 6% is 6% of your margin required. And just looking at the RUT, what you do is you take the spread that you have, and most of the spreads we look at are 10-point spreads. And there are 100 shares per contract, even though you can't trade the RUT. There's 100 shares per contract. So you take 100 shares times a 10-point spread is $1,000 margin required for one contract. Now, that's an easy calculation. The brokers actually will only require a little bit less than that because you can't lose. Well, you could if you do just one position or do a bear call or a bull put. So they probably do require $1,000 margin on that. But the way to find that out is you just come up here to the trade tab. And we'll just do this, run this through as an exercise. Let's say we want to sell a vertical. So we're going to, let's say we do, we want to sell that guy. Okay. And let's say we want, now here you can put in the number of contracts. We usually talk about 10 contracts, so let's do that. Okay, and you can say confirm and send, but it's not going to do that until you say okay. But up comes this little order statement. All right, max loss $8,650, and that is the $1,000 per contract times 10 contracts, $10,000 minus the amount that you could gain if it goes the opposite way. Okay, this minus the 1,350, and that's how you come up with your margin requirement. Now, to make it easy, I just say $10,000. So you take 6% of $10,000, and I'm willing to lose $600. I'm looking for a profit of 10% or $1,000. Okay, and that's the math, and that's my profit and loss. That's how I do that. Now, coming back over here, and let me just get out of this. Coming back over here to the Analyze tab, one of the things you can do now is you can say, well, I'm going to manage this by this purple line. And I can set up these dotted lines at 6% of 1,000 or 600. And I can come over here and I can say, there's my point of loss, if you will. And there's two things you can do. You can either see it in the white there, or you can see it down in the box on the lower left-hand side in purple. See, it says minus 632. So that's my loss point. And then this would be my profit point up around here. Okay. Now, remember that this is going to change on a daily basis. This will change on a daily basis. How often do I change these lines? When I'm doing the analysis, I go ahead and change these lines. I don't usually do a detailed analysis on theta trades on a daily basis. I really don't. I kind of let it go. For a while. Let it work. I've got 40 days till expiration. I let it work for a while. But that's how you can set things up, Fred, for the minus 6% and the plus 10%. Does that make sense? Fred, if you have a question on that, go ahead and raise your hand. Otherwise, I'll assume that you got that. And you might have it, and you brought it to my attention because other people, the new people, might have not heard that discussion, and I appreciate that, Fred. Fred, was that okay?
Yeah, but there again, some of us, including me, can't always do a 10 contracts. So
okay.
Let's say 4 contracts.
Okay. Okay. And that's very easy to do. I just always do the 10, Fred, because the calculations are easy, and when I'm doing it on the fly here, it's just easy for me to do that. But let's just take this one for an example. Let's say we sell the 1170 and buy the 1180, and you only want 4 contracts. Okay. And that's going to be $4,000 minus the credit you can get, and there it is, right? This order statement will always tell you the margin requirement. The brokers on a theta trade will always require the max loss as margin. And
so then you take 6% of the 3652.
Well, you can if you want to be that accurate, but I find it easier to just round things and put them, put it close. Yeah, 6% of the 4,000, or let's see, what did I do there? Let's see.
Well, you got a strangle there.
Yeah, I don't want to do any of that stuff. So let's just get out of that.
But I see what you're doing now. So,
yeah.
So consequently, that you might be interested in showing it the new people how to get to the Analyze tab. But
okay.
I think that could be done.
All right, that's what I'll do. That's what I'll do next. Okay, good, Fred. Thanks. And that's good. I love that because Fred's been with me for a while, and he's heard me talk about this stuff. But for the new people, a lot of times I just gloss right over it. Now a lot of the videos and that on Options Infinity that are free to anybody explain all this. But if you got a question, and I can surely talk about it right here. But you know, as far as the analyze tab, what you want to do is, let's say you set up a trade, you set up this trade, and let's do that again. Just going to sell a vertical. Oops. And you set up the quantity for whatever you want, and before you confirm and send, if you just come over here underneath vertical, Thinkorswim's interesting. They've got so much power, but unless you do it for a couple times, it's like, who would ever know that you come over here and you right click and you can go to and you can analyze this trade, okay? And it goes right over here to the analyze, and there it is, okay? Now, I don't want that, so I'm just going to go over here and right click and delete it. But when you put it on the Analyze tab, you can always see what the current credit is for your trade. So I always like to have that. Then once you make the trade, it will show up here on, this is the actual trade risk profile for what we're doing. Okay? And all you do is you come to the Analyze tab and you hit Risk Profile. And that's all you do there. Okay? Alrighty, good deal. Alright, let's take a look at our directional trades. And just recently we got into Gilead Science. And Gilead's kind of going sideways, but I'm thinking it's going to bounce off this ribbon and go up. And with the way the market's kind of channeling, I thought, well, it's kind of good to have a couple calls in there. And of course, I did Clorox, and that wasn't very good. So let's see, what do I want to do on Clorox right now? Look at the way that's. I thought it would bounce off. Usually when it goes through there like that, the bounce off doesn't happen. What do you think? What do you think? There's a vote for everybody. 1, get rid of Clorox. And 2, hold on to it. 1, get rid of Clorox, and 2, hold on to it. 1, get rid of Clorox, and 2, hold on to it. One, 2, 3, 4. Well, this is pretty easy. 90% say get rid of it. 95% say get rid of it. Okay, so originally we got in there because it was oversold. Money flow was going in. It was moving on up, and it looked to me like it was pulling back, and I was looking for the trampoline, and it doesn't appear like the trampoline is going to happen. So I think it makes sense to get out of there. So I'm going to do that. You just go over to the monitor tab to exit something, and you find it over here, and there it is, and we're down a little bit on that already. You just click on here, create a closing order. Remember that when we got in here, it was at $8.70. So it was higher than that. So remember, we always want to adjust the amount that we get based on your portfolio size. And here again, there's a free tutorial on trade size on Options Infinity. Now, we're going to be closing down Breath Hour Options Mentoring shortly. And you're all invited to just go over and become a free member of Options Infinity, and then you'll have access to all that free stuff, all the tutorials, everything that I've put together. So I would behoove everybody to do that. But you just come over here, create a closing order, click on that. There it is. I want to make sure I go at the midpoint, and I'm out. Okay, good deal. Good deal. All right, let's go back and take a peek at some other ones here. John Deere. Well, first of all, I want to take a look at one that John brought to my attention. And you remember a couple, I think it might have been last week, John, that you brought this to everybody's attention and said, it looks to me like Lulu is going to be a good put opportunity. And indeed it was. Indeed it was. When we looked at it, it was overbought. The money flow was coming out of it. We had a ready. There's the ready day. There's a lower low, and there's the go right there. So that was an excellent call, John. Steve, to enlist in Options Infinity, all you have to do is go over to the website, www.optionsinfinity.com, and just click on free membership. Just click on free membership, and you've got access to all that stuff. Okay. The other one I want to take a peek at was John Deere. John Deere is looking good as far as a put's concerned. We've got AT&T. AT&T is kind of going sideways here, but I like the way it appears here. Verizon, it gave us a little reprieve here, and now it's, I'm going to hold on to Verizon. And then just recently we got Procter & Gamble. Now, a lot of these are coming up earnings in 2 to 3 weeks. 2 to 3 weeks. So Gilead Science is April 28th. Procter & Gamble is April 26th. AT&T is April 26th, and Danaher and Verizon is April 21st. So we'll be talking about what we want to do with those next week, whether we want to hold on to those or not. Yep. And John Bonnie just came through and says, thanks for you really nailed it on Lulu. So that was good. Excellent. Excellent. Alrighty. And yes, and Lulu is past earnings. That's exactly right. So that's a good one to just hold on to. It's a good one to just hold on to. Okay, so we looked at the SPX. We're going to hold everything we've got on Theta. The SPY, I was looking for a measured move. Got it this morning. I'm in a call on the SPY. TLT, I'm waiting for it to come down and look for a measured move for a call there. We did get out of Clorox, so we only have one call, Gilead Science, and we have 5 puts, John Deere, Danaher, AT&T, Verizon, and Procter & Gamble. Any other stocks or anything you want to look at, or any questions that you have at this point in time for me? I'll just pause and let you either type them in or raise your hand. John, I see your hand is up again. Let me unmute you. John, you have anything else you want to take a peek at?
Well, I thought I'd go back and look at some of the ones that I suggested a little earlier.
All right.
Qualcomm.
I was looking on the watch list because we used to have Qualcomm as financially strong, but yeah.
Looks like it's just channeling there, doesn't it?
Yeah, it does look like it's channeling there, John, and I wouldn't want to get into something with that's coming up here on earnings, so I'm going to hold on Qualcomm.
Mm-hmm. Microsoft.
Yeah, Microsoft is, it did indeed give a ready, a set, and a go. However, it's right in the middle here. And when something's right in the middle here, I like it to be, up here or down here, because that gives me the best opportunity for a nice move. And I don't think Microsoft is at that point. The other thing that's got earnings here on the 20th also, so.
Mm-hmm. I don't know whether we've looked at J&J recently or not, but
I don't think so, no. Yeah, J&J just keeps climbing and climbing, doesn't it?
Yeah.
Earnings is right around the corner on J&J.
Yeah.
That's on the 19th.
Yeah.
That's on the 19th.
But it looks like it's getting into the position of a put one of these days.
Yeah, it's getting in the nosebleed territory, but this is the thing that I kind of watch, John, and it's nobody's getting out just yet. So
no, and and earnings are right around the corner too.
Yep.
I think that's all I've got up my sleeve.
Okay,
thank you.
That's good. Thank you, John. Okay, any other questions? Any other stocks you want to take a peek at? You can either raise your hand or type them in. Got a couple more minutes. This is your webinar. I'm at your disposal. Target, TGT. Oh, isn't that just interesting? Okay. Up here to the +2. Definitely overbought. Money flow was starting to come out. Now it looks like it's coming back in, but probably would have been over here. So let's go ahead and get over here. Now let's do this count here. Let's do this count. So there's a ready abort. There's a ready, set, go. So that would have been a go on target right there. And you can see that the 5 and the 8 are below the 13. Is it too late to get into target? No. See, this is one of the nice things when it's way up here or way down here. You've got a lot of room for it to work. And okay, so you missed this. You missed it right here. But that's only like half a dollar from where it is today. It's only about a half a dollar from where you could have gotten in, almost $1 on an $80 stock. So did the train leave the station on this one yet? No, I don't think it did. So I think Target is a good one. And it doesn't appear like its earnings are until May. Yeah, May 16th. So that's a good one. That's a good one. Caterpillar. Look at that move, 261. 261. And it's definitely overbought. Money flow was starting to come out and came back in. It's got earnings right around the corner. Looks like maybe a little bit of a trampoline, but this, with it being at the 261 and right between the -1 and -2, I'd just wait. I'd wait for a new one to get past this earnings, and we'll see. But other than that, I think a put in Caterpillar is probably a good one. It's a good one too. Okay, Cisco. Cisco is on our financially strong, but I don't have it on my list here because Cisco is relatively inexpensive, and you don't get the bang for your buck on the options. When the stock is around $60 and above, you're going to get and you go with a 10% in the money if you can. You're going to get about a 6 to 7 to 1 leverage factor, and that's kind of what I'm looking for. With Cisco, you're probably only going to get a 3 to 1 leverage factor. But looking at Cisco, it's definitely overbought. Money flow was coming out of there, and it had a ready, set, abort, ready, abort, ready, set. So the thing is, it would have to go quite a bit lower tomorrow, but that's a good one to look at. But I probably wouldn't do that, Eddie, because of it's less expensive. You don't get that leverage that I like. Okay, Bonnie says going back to the SPX. Okay, it's approaching the +1 here, and I'm sure Steve has his finger on the sell button. Yeah, it's getting close. Like I said, a lot happens between now and the end of the day. If it's pushing up around here, Bonnie, yeah, absolutely, there would be a bear call opportunity. And what you would do is, well, I wouldn't do it right now. I'd wait. But you see how what I usually try to do is go as close to at the money as possible and try to get at least $2.50 worth of credit. You can't always do that, but just kind of put a bracket around there. Remember, we're going with a 5-point spread, and maybe wait and see where it is at the end. Let's say it's around here. What I would do is I would sell the 2060 and buy the 2065, and I would go out here, and I'd go out about. I'd probably go with this one. Probably go with this one. I don't know. I think this is the, let's see, 8. This is the quarterly. I don't know why it says weekly. That's the quarterly. I'd go with the April 5. Yeah, the market rolls over at the end of the day, the last few days, and that doesn't mean anything. But like I said, I wouldn't worry about that. What I'd be looking for is what's happening between now and the end of the day, and if it's around here, or let's say it's around here, then you want to maybe sell the 2065, 2070, get right around there to put your entry in there. Yep. Okay, good deal. Good webinar, good questions. I appreciate all the comments and the questions you have. Remember, this is your webinar, and I'm here for you. And no question's a dumb one, because everybody can benefit from hearing something that maybe other people will take for granted that you just need clarification on. And I'm here to clarify for you. Okay, that's it for the webinar. Have good trading the rest of the week, and we'll talk to you next Tuesday. Bye-bye now.